Are we heading into one of the best buyer's markets we have seen in many years right here in San Diego? That's what we're going to dive into today. We're going to show you what Zillow is saying about the San Diego housing market and where we stand on that front. We're also going to get into 3 factors that are affecting the housing market and actually skewing a little bit more towards a buyer-friendly market. So what are all those factors? Let's get into all that right now. So first off, what is Zillow saying about the market? Are we in a buyer's or seller's housing market? They rank the 250 major markets, and San Diego is included in one of those. As we're going through here, score above 70 is going to be a strong seller's market. Below 27 is a strong buyer's market. So here's Zillow's market heat index, the US national readings, going back through 2018 to early parts of 2020 when we were in a neutral market. Shortly after that, jumped into a heavy seller's market. Now this is national, but the story and the trend is basically the same here for San Diego. And we'll get into the exacts here shortly. And then for a few years, we were in a strong seller's market. Towards the end of 2022, we saw a dip back into a seller's market. You can see we've just been tracking along the seller's market until recently when we were going into a neutral market. As we dive into the heat index map for May of 2025, you're going to see here's the color scale again, but where does San Diego fall on that? So our highest reading of San Diego was 88 of May of 2021. That is when we were in more of that frenzied market when everything was going for well above list. Buyers were definitely not in the driver's seats. The sellers were in the driver's seats where they were demanding much higher prices, multiple offers, bidding wars, all that kind of stuff was going on. Right now, May 2025, we are sitting at a 58, which is just into a seller's market right here. So we're not quite neutral, but the person who wrote this article actually had a different view of that. We're basically at where we were in May of 2018 and May of 2019. When we were working during this time, it was definitely a much different market. You were seeing homes sit a bit longer. You were seeing that buyers definitely had somewhat of negotiating power, and we are kind of skewing back towards that right now. And this article is from Resi Club. Do they agree with Zillow's assessment? And Lance Lambert says, directionally, I believe Zillow has correctly identified many regional housing markets where buyers have gained the most power, particularly around the Gulf, as well as markets where sellers have maintained, relatively speaking, somewhat of a grip, including large portions of the Northeast and Midwest. Based on his own personal housing analysis, he considers Southwest Florida to be the weakest and softest chunk of the U.S. housing market, not too far behind the pockets of Texas, Colorado, and Arizona. But what about San Diego? In my view, many West Coast markets are softer right now than Zillow's analysis suggests, in particular the areas that we have recently seen big jumps in active inventory for sale. So what are the 3 main factors that are potentially making it one of the best buyer's markets that we have seen in years? The first thing is going to be inventory. For a buyer, the more homes that are on the market equals more choices for you, and it spreads out the competition as well. So in times that we did have a little bit of inventory, which a lot of buyers, that's where prices are going up. That's the bidding wars. That's all that kind of stuff. As we're getting into a higher inventory level right now and less demand, less buyers out there, it's giving you more choices with less competition. So we'll jump into inventory here in a second. This is from Altos Research. And we always like to look at the market action index. It answers how's the market, comparing rate of sale versus inventory. Right now, we're at a slight seller's advantage, but we're actually seeing some different things in the market. It's really dependent, like we always mention, on location, price point, all of those other factors for your specific situation, if you are a seller or if you are a buyer, to know what's going on in the specific markets that you are looking at. But right now, as a whole, they're saying we are in a slight seller's market, and the market action index is hovering around 41. This is less than last month's market action index. Inventory has held steady at or around 3,514. So where does inventory actually stand? As of right now, like I said, 3,514. This for just detached homes. I'm going to show you condos here in a moment because that is up as well. but we're above any point we have been on this entire chart, which goes back 5 years. So is inventory more than it has been in years past? Absolutely. And we are seeing this continue to go. Now, at some point in the next few weeks, within the next few weeks to the next month or so, we should start seeing inventory peaking out, at least new homes coming on the market. Inventory could still grow as it sits and as the homes don't go under contract. The new listings will keep adding on to the active inventory, potentially rising this, but at some point over the next few weeks, the next few months, this will be topping out. It just depends on how high we're gonna go. And now looking at, this is the condos, 2,520. You can see we're well above any time over these past 5 years, going back to July of 2020. So the condo market, yes, we've seen even more growth in the condo market. So if you're looking in condos, townhomes, that kind of stuff, you're definitely going to have a lot more options compared to this time last year. We had 1,500, now we're closer to 2,500. And look at this, back in 2023, June 2023, there was only 742 homes, condos on the market. Now we're sitting well above that. And here's just a different view looking back to 2017. So we're not quite at 2019. The last chart we showed you kind of went back to this level right here, but the years right before the pandemic, you could see we're slightly above that until you get to 2017. So we just surpassed 2017 levels right here, and we are on our way up. Once again, how far is that going to go up? Now let's look at inventory surplus or deficit. Do we have more homes on average? Do we have less homes on average compared to the average of the past few years? Right now it's showing in all of San Diego, we are looking at about 33% above the long-term average of homes. So according to this, we are at a surplus of homes for sale. And we can break this down even a little bit further, going into specific zip codes. You can see most of the area is going to be red here in San Diego. There are a few areas that this is saying that there's actually a little bit of a deficit in the number of homes. Yeah, Cardiff here, once again, super small sample size. So Rancho Santa Fe, in North County, you do have like the Aviaris section where it's actually inventory is down compared to the long-term average a little bit. But most other areas here in San Diego are showing a surplus of homes for sale. Anytime you're getting into like this Claremont area, you're getting into 91% above where we were. You're getting into 94% above where we were out in Tierra Santa. Once again, smaller sample size, but you can see some areas are showing a much larger number of homes on the market than we have seen in years past for the average. Certain areas of San Marcos a little bit higher, but look at even different cities. You know, when I say cities, areas are different, cities are different, neighborhoods are different. Northern San Marcos is showing a 42% surplus, while Southern San Marcos is just showing a 16% surplus. So it's really dependent from market to market. The second factor that is making it look like a little bit more like a buyer's market out there is properties with a price decrease. And right now it is trending up, looking about 34.72% of homes on the market have had a price reduction. It's a little bit more than in 2024, than in 2023, and the same time frame in 2022. So over these past 5 years, yes, it's definitely higher. So homes are seeing more price cuts, or more homes are seeing more price cuts than we have seen in years past. So that's just showing a little bit of softness on the pricing front as well. If homes are hitting the market, number of buyers out there are not absorbing those homes and they're sitting for a little bit longer. There's not enough demand out there to take all the homes off the market. Maybe they're sitting 30, 45, 60 days. The sellers are deciding to reduce the price. Even in some of our own listings, we came on the market, it's sitting for a while, and we've had to do a price reduction to come to where the market is right now. And now we're looking at the price cut percent. Now that was, last chart was all of San Diego, that was just homes. Now we're looking at each individual zip code. And as we zoom in, you can see up in Encinitas, 33.1% of homes have seen a price cut. You see the more red it is, the higher the price cuts. Some areas like Rancho, a little bit less. As you go down into La Jolla, about 16.6%. And then as you get away from some of the coastal zones, you'll see some bigger numbers popping up out in Santee area, 33.5%. And if we continue to see more and more price cuts in a lot of these areas, you could potentially see prices softening as well going into the next few months. And looking at this article from Mortgage News Daily, mortgage rates not too far from 8-month lows. Friday's mortgage rates ended up being right in line with Thursday's average at 6.72. And I'll show you a quick update of where we are right now and where it has been trending. And so yes, we have seen mortgage rates go down over these past few weeks. In a general sense, the recent improvement has been a byproduct of slightly softer economic data and inflation. There are key reports that speak to those metrics over the next 2 weeks. Rates have more room to fall if the data shows a continued softening, but could spike abruptly if employment surges or tariff-driven inflation actually materializes. So as of today, 6:30, it's actually even fallen a bit more. When I brought this chart up earlier today, it was still at that 6.72. Now today, 6.67%. So as we approach that 6.5%, the lower sixes, for buyers out there, you're probably going to expect some more demand as some more buyers come off the bench, but it's been falling consistently since a few weeks ago. So a few weeks, about halfway through June until right now, mortgage rates have continued to fall. And while the Fed is potentially adjusting rates in the coming meetings, there's no guarantee of that, but the more important number to keep an eye on is the 10-year Treasury yield. It kind of reflects what will happen to mortgage rates a little more closely than the Fed funds rate. And it does track true right here. As you can see, since that time right in here, like mid-June to where we are now, you have seen this continue to fall, in turn causing the mortgage rates to fall as well. So it is right now one of the best markets for home buyers that we have seen in some time. While prices do remain elevated, we've seen them come down a little bit in the past few months. But first off, inventory, the number of homes on the market is up. So for buyers, that means more choices. Second factor out there is going to be the number of price reductions out there, which we have seen go up as well. That means more negotiating power for buyers, and you are seeing some prices come down a little bit on that front as well. The third factor, and one of the biggest factors, is mortgage rates. And with mortgage rates continuing to fall over the past few days, you are getting more purchasing power as a buyer out there. And so is it really the best time for a buyer right now? It's definitely better than it has been in the past few years. And we are trending into a little bit more buyer-friendly market, but it really comes down to your specific situation, what your long-term goals are, what your actual plan is. So it's important to start that conversation and figure out if now is the right time to buy for you. But if you guys want some more information, go download our free buyer's guide right there. Give you all the resources that you need to know about buying a home right here in San Diego.